Hey everyone, welcome back to Grumpy Monkey Trading. My name is Michael. On the show today, we're going to be recapping some stocks that we've looked at in past episodes. So stocks like Twitter, Microsoft, Buffalo Wild Wings, Tesla, probably some others. We're going to take a look at them and see how they're doing now compared to when we looked at them previously. If you enjoy the show, please be sure to subscribe to this station. Twitter in the news as always, this time for really not doing things like naming a CEO, which people are getting very frustrated about. Even activist investor coming out on the weekend tweeting saying, just make Dorsey the CEO. We don't care. We just want someone named so we can move on with life. And that I can understand that from an investment perspective, but from a company perspective, they should pick the person that is the most qualified, preferably someone that can do it full time. I do actually believe that is Dorsey, but I can appreciate the board's opinion as well. For the stock itself, really, we're still waiting on Project Lightning. We're waiting on new user engagement. So nothing has really changed in the fundamental money value of the stock yet to warrant really a big technical change in the stock charts. So no matter what comes out in the news associated with CEOs, there'll be a little bump and things like that, but it's not changing the fundamentals right now. When we look at the chart, you can kind of see that, right? We're not actually doing a whole lot. It's in a big waiting pattern, probably for this announcement. But we're in actually, so the last episode was the red line here. I indicated it was probably going to pop up and break that line, and it did, and then it kind of settled and bounced around. Now it's in this descending triangle pattern, so this blue line here and this blue line here. Typically when that happens, that tends to favor falling out of the pattern and descending again, right? Because you're constantly having not as high highs as the time you had them before. So it indicates that there's more of a bearish pressure. If a CEO was named though, and it was someone that the market approved of, so likely Dorsey, then you would see the stock rise dramatically, probably touching this line. It makes Twitter kind of a weird play because the 51% case is that it's going to go down in the short term because there isn't a fundamental reason for it to go up yet, you know, until we get new quarterly results or a new product or something. But there's the intrinsic value of the CEO nomination, or someone could swoop in and buy Twitter if it fell again, which is always kind of hanging over our head. So something to keep in mind. On the weekly, we've come up against the resistance line that I drew previously and indicated that we probably would reach this week. We did reach it. So I do expect that overall we're due for a little retraction, barring some sort of news that just really gets people excited and provides that intrinsic value. Buffalo Wild Wings, BWLD. On a previous episode, I had one on cup and handle patterns, and this was one of the stocks that got identified in that analysis. So you can see this nice cup and handle. Now, in the last week, though, it looks like it's broken out of its handle pattern, as you can see, and is now challenging the upper cup limit. So this is actually really, really exciting. If it can just break this boundary with a good amount of volume, then we are away to the races. Generally, it's getting very good analyst reviews. It's as a stock as a whole, it's getting very good reviews. They're opening new restaurants all over the place. So I am hopeful that with good market conditions, we'll break the upper lip of the cup, and then we will be heading into Profit Town. So Microsoft, still in that channel pattern that we defined before. Nothing really has happened with it. It's gone down a little bit because of China, now towards the lower end of the channel, which actually makes it a half-decent buying opportunity when you think about it. The lower support line was reaffirmed, so the one around 40.5, and we're less than 10% off that support line. So if we were to dip a little bit and touch this support line, it'd be a good buying opportunity. Heck, even now is a decent buying opportunity if you believe in Microsoft long term. Because look, just to get to the top of the channel before we would even hit a breakout point is a nice 10-15% profit. So that's not a bad way to think about Microsoft. It's a company that isn't going away and has a lot of potential to do really good things. Tesla TSLA. Oh, I hope you saw the interview with Stephen Colbert and Elon Musk. It was kind of an awkward interview, I thought, actually, for a little bit. But I did really enjoy when they started talking about Mars and heating up the planet and what would be done. So the slow way of trapping greenhouse gases, everyone knows that. But I've never heard the idea of just dropping thermonuclear bombs on the poles and using that as a way to heat it up faster. I thought that was hilarious, particularly Colbert's response of being like, well, that's what a master villain would do. I thought that was also great. This stock as a whole is looking really nice as this ascending triangle pattern forms. So we have the top of the triangle here, and we have a series of higher lows forming the bottom part of the triangle. So that means that the bears can't really ever get fully in control, and that overall the sentiment is positive, lifting the stock higher against this wall. It'll need to break through it eventually to really be called a new trend, but it's positive nonetheless. And if it does break through with volume, then you can definitely see some. All right, so Apple, I've done about 14 episodes now. I've not done a single thing on Apple. So now's the time, I feel. We've had the big sell-off for China, as well as concerns about product cannibalization. But we bounced nicely off this support line, which I would consider right now is our immediate and most secure support line, followed up by this one right here, which is sort of the extreme. If it really fell below that, we could be in for a prolonged downtrend. If it fell below this one, we still have that other one as a safety net to fall back on. Now, we're at a weird point with this stock because we had a long uptrend. Now we're looking to form sort of a new pattern. We've come down from that. So a couple patterns that could be available to us is you may consider this a head, and you may consider this a shoulder, which would mean that we're forming another shoulder, which could be the beginning of a new pattern for head and shoulders and a downtrend. Or prolonged uptrend can also lead into a cup and handle pattern where natural sell-off occurs, where people take profit. So then we stabilize for a little while like this, and we come back, and in a month's time, not a month, many months' time, we then start to establish more momentum and build up. The key point here, though, is that I don't really see a new trend establishing anytime soon. So this stock is probably going to kind of languish in this area without some sort of push. So new earnings release that really changes the game, or new products that change the game where investors can get excited about them. Otherwise, we're just going to kind of languish around until a new trend is formed. So that's my first take on Apple. All right, that's it. Thanks for watching. If you enjoyed the show, please subscribe to the channel. The subscriptions really help grow the show, so I would like to get more subscribers. Thanks again for watching, and I'll see you again soon. Bye.